Okay, I'm going to skip ahead for a second because this question is a little bit related in the sense that it's also talking about taxes. Corporations paying quote unquote no taxes. Does this really happen? It makes my head spin. So a couple things, and this is again kind of a more advanced topic. So if it's something that is sounding like all Greek to you and is confusing, like tune it out. But if it's something you want to understand better, hang in for a second. So what you have to understand, just like what I talked about where you can have tax loss harvesting with investment gains, something similar can happen with companies. If you think about like the evolution cycle or the life cycle of a company, early on you are making significant investments and you may not be generating any profitability for a long time, right? It could take years before companies turn to profitability. And so in those early stages, they can accrue those losses on their balance sheet and use them to offset future profits. Because, if the government's not going to cut you a check as a company if you're generating losses. So instead, what they allow you to do is accrue those losses over time and apply them to future levels of profitability. So that's one thing that happens. The other thing that happens is that in accounting, there are sort of two sets of books. There is the GAAP, or generally accepted accounting principles, set of books that is what gets published in the financial statements that all of us read. And then there is tax accounting. And the biggest difference, and I'm going to get, I'm sure, ridiculed by tax accountants because I'm not a tax accountant. What I understand of it is what I know from being a financial analyst. But what happens is, and it most specifically applies to things like capital expenditures, which flow through your cash flow statement, as well as like amortization and depreciation expense. So when companies are making capital expenditures, and capital expenditures are things like buying new assets, they can also be buying entire companies. And the premium you pay for that, or the value of the asset that you buy, gets depreciated or amortized over time for tax purposes. And it lowers your current year taxable income. And there's sometimes a mismatch between those two things for tax purposes versus GAAP, or generally accepted accounting purposes. And sometimes that factors into why a company is not paying taxes in the current year, even though they might show profitability on a GAAP basis. Sometimes for tax purposes, things depreciate on a more rapid basis than they do for GAAP purposes, and that creates some of that. So there are literally tax accountants whose whole job is to minimize the tax obligations of major corporations, and they typically do it most usually through one of those two ways. There are also sometimes all sorts of other loopholes for, whether they're domiciling assets in other countries and things like that, again, beyond my area of expertise. So when people say, that is basically how that happens and why that happens. Now, asterisk on all this. This is what we're talking about when we're talking about federal corporate income taxes. That doesn't mean these companies are paying no taxes at all. Every single employer is paying taxes for every single employee that they hire. Many people don't realize this, but like when you pay things like your FICA taxes, the company is paying the same amount. So you're only paying half of your FICA taxes every year, the amount that like gets deducted out of your paycheck that goes to Social Security and Medicare. Your business or your employer is paying that other half. So there are still significant taxes being borne by corporations and employers, even if they're not quote unquote paying federal income taxes on their income statement. So that's kind of what's going on. And, so to your question, is it true? Yes, but is kind of what I would say. And the other thing to note is that typically if somebody isn't paying taxes, it's because they were investing significantly to grow the business, which is allowing them to have significant amortization that is offsetting their current level of profitability, or they invested significantly in the past and had significant losses leading into this year that have accrued that is allowing them to currently offset profitability. And our tax code is super complex and complicated, even more so for corporate taxes. And could it benefit from simplification? Absolutely. I mean, how much is spent on tax accountants every year in order for companies to minimize their taxes? That could be money that is invested and generates more jobs and things like that. So it's a complex topic, and I think when we try to make it out to be black and white, both sides are wrong. There's actually a lot of shades of gray, and they kind of prey on that, right? The fact that the average person doesn't understand the intricacies of the subject. So make sure that you do before you're swayed by kind of like very black and white opinions on it.